SoFi was just ranked the #1 bank in the United States of America by none other than Forbes magazine. And ahead of names like Bank of America and American Express, but the stock itself, it's still nowhere near the highs of $32.73. So the question that you got to be asking yourself is SoFi actually as undervalued the way that people say it is? Or is there something missing that investors are completely unaware of? And with the earnings coming up very soon, this could be a massive turning point. So, hey, it's InvestQ here. David Figueroa at InvestQ. If you want real breakdowns on stocks like this, such as SoFi, Castellum CTM, or ticker symbol LAES, all these are high growth opportunities. Make sure to please subscribe and hit the like button and comment below what it is you want to see in upcoming future videos, as I always respond to all the comments in my comment section. So let's start off with the news that dropped not too long ago. This report came out less than 24 hours ago. This one came out about a day ago. And as you see here, it's directly from Forbes itself. It's saying that SoFi, which is ranked #1 in the US, the bank owns its tech stack, which says CEO Anthony Noto. And you just got over here where it just has a little article based on SoFi. It has a section right there. And it's surprising because a lot of people, when they think about the best #1 bank in the United States of America, you're going to be thinking things like JP Morgan, you're going to be thinking things like American Express, Chase, something like that. But it's not any of those banks at all. The stock that we are covering today is the one that's ranked #1 by Forbes. And that matters not because it's not just about the revenue, and this isn't the earnings. This is about the customer perception and what all the consumers, all the people that use SoFi Bank, the app itself, how they feel about the bank. That means that the brand trust is growing, user experience is strong, and people actually like using SoFi. And as we do know, it's not when we look at the price of the share price of a company, the stock, any stock that be, whether it's Castellum, LAES, Big Bear AI, whatever the stock. It's not just about how well the company's performing. The other metrics that come along with the share price has to do with market sentiment and trader psychology, the psychology of the investors that are actually putting their hard-earned capital into a stock. And with this article, especially since it is a fintech bank, this is everything because, again, due to them improving themselves as a business year over year and quarter over quarter. And even though there is still some, not pessimism, but some, I would say, unanswered questions with the stock itself, this is very good, showing a lot more positive signs with the stock. So that's showing how the market sentiment on the stock is continuing to improve. And the things that are going to make this interesting is, even with this recognition, the stock is still trading far below its highs. And the highs itself, let's take a look back at it again. You do see here that the all-time highs are at $32.73. And currently on today's market trading session, the stock is currently at $16.34. Now, we do have a bit of a disconnect, and it's pretty typical for things like this to happen with stocks, because with SoFi itself, we have strong brand recognition, we have a growing user base, but the stock itself isn't reflecting that as of yet. And the reason I do say as of yet, like as of this very moment, is because, again, the market could be underperforming right now. However, that doesn't signify, and that doesn't mean that it's going to stay flat like this and continue to drop for the long term. Especially for us at this channel, we typically view things with stocks from a long-term perspective. And when fundamentals and perception improve before the stock move, that's where opportunities can form. Now let's talk about what actually matters next. SoFi just officially announced Q1 of 2026, they're going to be announcing their quarterly earnings on April 29th. Let's pull that up real quick for you guys. So this is big because this will also help to decide where the market where the market will be going, and it'll also help us realize if if the stock is really just all hype or is the growth actually real. So let me just pull up April 29th. Here we go. So they have the scheduled conference call all for April 29th, as you see right there. Now, the key things that I personally am going to be watching, and I do recommend that you watch as well, is that you got to look at the revenue growth, you got to look at the member growth, profitability trends, loan performance, and guidance. Because if they execute, this could be the moment the stock starts catching up. And I do want to be real with you. I want to be real with you guys for a second. There were times when I was watching companies and everything looked good, fundamentally, of course, but the stock just wasn't moving or it was going even lower. As you know, we cover Castellum CTM. That's a great example of what it is we're talking about. Now, I would either be getting impatient. I never would sell too early. I never have panic sell, but I would get temptations here and there, especially as I would overanalyze my portfolio and keep looking at it and checking up on it when that wasn't the good thing to do at that time. But thankfully, I had the discipline to not panic sell, or I might have missed the move completely anytime that there was blood in the market and we dropped down significantly. Then earnings would hit, and suddenly the market wakes up and it shoots to the upside and it becomes catabolic. A good example was QBTS. Thankfully, I was in on the move at the time, but there are other opportunities I did miss out on, which we've all been there. And I just look at what's building underneath the surface rather than just looking at price like I used to when I first started out. I have had pretty significant growth decently fast over the past year, but there was still some confusion when I started out, and I have learned and evolved. And this is a good example of a company like SOFI or other companies that are in the same position as SOFI that fundamentally they're good. Market sentiment is improving, but the stock isn't performing at this very moment. You got to expand your horizons and not just look at this from the day-to-day time frame charts. You got to look at this over a 1, 3, 5, 10-year time frame if you are a long-term bag holder of any company. And I want to ask you guys specifically, do you think SoFi is undervalued right now, or do you think the market is pricing it correctly? Comment below. I actually am interested to hear what it is you guys think. And I do want to get the market sentiment of all of my subscribers and what you think about SoFi Bank. So let's go over a few bull and bear cases for the company. The bull case for why people think that this could continue to the upside is there's strong brand recognition, again, #1 ranking by Forbes, rapid revenue growth. Rapid revenue growth, expanding ecosystem, and there's an earning report that's coming soon that could act as a catalyst to the upside within the short term. The bear case, though, is that they're still not fully profitable on the GAAP. There's a lot of volatility in fintech banks themselves. There's lots of market skepticism still, and that's part of the reason why price hasn't moved yet. And let's be real, there's lots of high expectations into earnings. And as we do know, when you look at the big boy Nvidia, you do see how there's high expectations, and no matter how well they improve and how well they do, the stock just won't budge to the upside. And on a smaller scale, SoFi is kind of in a similar situation as Nvidia, just not at as big of a scale as Nvidia. Now, here's how I personally see it. SoFi right now is in a phase where the story is improving, but the stock hasn't fully caught up yet. And those are types of setups that can either explode or completely disappoint, which is why earnings is everything on April 29th. And if you want me to break down SoFi earnings as they do drop, make sure you're subscribed. And if you're subscribed, if you're serious about stocks like SoFi or other growth companies, stay consistent, stay patient, and always do your own deep dive and do your own research on any stock you look to add into your portfolio. Because you do need to make the best decisions that works well with your psychology, your risk to reward ratio, and your own personal thesis. So with that being said, guys, InvestQ out. Please comment below what you think about this video, and I'll see you all in the next one.